Something changed this week, and most people still haven't connected the dots. While most crypto traders are focused on price candles, the infrastructure around XRP keeps expanding in ways that look a lot more like traditional finance preparation than retail hype. We're now seeing tokenized US Treasuries on XRPL, central bank collaboration tied to government bond trading, institutional stablecoin yield products, Ripple Prime connecting into institutional liquidity venues, growing derivatives volume, major wallet growth, and a network upgrade approaching launch. And the bigger story? A lot of these institutions are not treating the XRPL like a speculative asset anymore. They're treating it like financial infrastructure. Let's break this all down. Nothing in this video is financial advice. This is for education and entertainment only. Always do your own research before investing in crypto or digital assets. One of the biggest updates came directly from Ripple X. According to the post, XRP Ledger moved from outside the top 10 to the number 4 position on the RWA.xyz rankings in under a year. That's a massive jump. And it matters because RWA's real-world assets are becoming one of the fastest growing sectors in crypto. We're talking about tokenized treasuries, money market funds, commercial paper, structured credit, and eventually entire financial products moving on-chain. For years, people talked about tokenization like a future idea. Now, institutions are actively building it. Ripple specifically highlighted that XRPL is already hosting tokenized financial assets on-chain, and they framed this as only the beginning of a much broader opportunity. That's a major shift in tone. This is no longer, maybe blockchain can help finance someday. Now it's, how fast can these systems scale? Another important discussion surfaced this week around tokenized assets on the XRPL. A lot of critics see terms like represented assets and immediately dismiss them because the assets are still custodial. But that misses the bigger picture. The distinction being made is between represented assets and fully distributed transferable assets. Right now, many institutional products are represented on-chain, but still controlled within permission systems. Meaning, the asset exists transparently on XRPL, but it cannot freely leave that environment yet. Some people see that as a weakness. Institutions see it as compliance. And honestly, that's probably the phase traditional finance was always going to start with, because large financial institutions care about auditability, settlement transparency, transaction history, controlled access, and regulatory accountability, not immediate DeFi freedom. The important part is this: even represented assets still create XRPL activity, settlement demand, transaction fees, liquidity flows, and institutional dependency on the network. So while crypto purists may want fully decentralized transferability immediately, institutions appear comfortable taking a slower path. And over time, represented systems can evolve into more open systems later. That's the transition many people believe we're beginning to watch now. Another major development came from ZeroCap and the Reserve Bank of Australia collaboration tied to Project Acacia. According to the report, they demonstrated secondary market trading of tokenized government bonds directly using XRP Ledger's native DEX infrastructure. This is a very serious use case because government bond markets are enormous, and if blockchain-based settlement systems can reduce friction, increase transparency, or speed up transfers, institutions are going to explore it aggressively. What stands out here is that XRPL wasn't being discussed as a speculative asset platform. It was being discussed as settlement infrastructure. That distinction matters, especially when central bank adjacent projects start experimenting with real financial market activity. We also saw another institutional step involving RLUSD. Copper, the firm, not the metal, announced that RLUSD is now part of its stablecoin rewards program, meaning institutional clients can hold RLUSD in custody and earn yield. This matters because stablecoins are becoming one of the most competitive battlegrounds in digital finance. Everyone wants liquidity, settlement utility, and yield-bearing digital dollars. The interesting part is RLUSD exists on both Ethereum and XRP Ledger. That multi-chain approach could become very important if Ripple wants RLUSD positioned as institutional-grade infrastructure, rather than a chain-specific product. Because institutions care less about tribalism and more about interoperability. Now let's talk about the network itself. Santiment reported that XRP saw over 4,300 new wallets created within 24 hours. one of the largest spikes of the year. Wallet growth doesn't guarantee price movement, but historically, network activity expansion often appears before major momentum shifts, especially when liquidity grows, derivatives activity expands, and infrastructure upgrades approach launch. At the same time, whales reportedly accumulated tens of millions of XRP over the past week. Again, not proof of anything by itself, but it shows larger participants are clearly active during this phase. Another major piece here is the XRPL 1.3 network upgrade. Reports indicate validator adoption crossed the halfway mark ahead of mainnet rollout. This upgrade includes improvements tied to NFTs, lending functionality, and broader network security. Infrastructure upgrades rarely create excitement with retail audiences, but institutions pay attention to reliability. Because if tokenized assets eventually settle on these systems, uptime and security become everything. And that's where XRPL's positioning becomes interesting. It's not trying to compete purely as a hype chain. It increasingly looks like it's trying to become dependable financial plumbing. One of the more overlooked developments came from discussions involving ABSA Bank and XRP-based settlement infrastructures in Africa. Cross-border payments remain one of the largest inefficiencies in global finance. Slow settlement, high fees, fragmented systems, limited interoperability. That's exactly the type of environment blockchain systems were built to improve. And if tokenization expands across emerging markets, the XRPL speed and low transaction costs become more relevant, especially in regions where modern financial infrastructure is still evolving rapidly. This is why so many XRP discussions keep circling back to payments, trade corridors, FX settlements, and tokenized liquidity. Another development that flew under the radar this week involves Ripple Prime and EDX Markets. This is where the conversation starts moving much closer to traditional financial infrastructure. According to reports circulating this week, Ripple Prime integrated with EDX Markets, the institutional crypto venue backed by major Wall Street players including Citadel Securities, Fidelity Digital Assets, Charles Schwab, and Virtu Financial. Now this is important because EDX is not built like a typical retail crypto exchange. It operates more like institutional market infrastructure, non-custodial, clearing-focused, and designed for professional liquidity access. Reports showed EDX handling hundreds of millions in daily trading volume, with some estimates pointing to roughly 685 million in a single 24-hour period. That's not meme coin retail activity. That's institutional flow. And Ripple Prime connecting into that environment matters because it potentially gives institutions a streamlined gateway into spot markets, futures infrastructure, liquidity aggregation, and broader digital asset execution services. This is the exact direction the market has been moving toward, not isolated crypto exchanges, but integrated institutional trading ecosystems. And when you zoom out, this lines up perfectly with the broader tokenization narrative we've been discussing throughout this episode, because tokenized finance needs liquidity, settlement rails, compliant infrastructure, and institutional-grade execution. That's the environment Ripple appears to be positioning for. Now let's connect this to the bigger picture happening behind the scenes on Wall Street. Former CFTC Chair Christopher Giancarlo recently discussed how the DTCC and broader financial systems are moving toward tokenized infrastructure and digital settlement modernization. For those unfamiliar, the DTCC processes an enormous portion of U.S. securities clearing and settlement. We're talking about the plumbing of traditional finance. Not social media hype, not speculative narratives, actual market infrastructure. And this is where things become extremely interesting, because institutions are no longer asking, should blockchain exist? They're asking, how do we integrate digital settlement into existing financial systems safely and efficiently? This is a completely different conversation than the crypto market was having a few years ago. We're now seeing tokenized bonds, tokenized money market funds, digital collateral systems, stablecoin settlement, and 24/7 market infrastructure discussions all accelerating at the same time. Even the SEC delaying parts of the tokenized securities exemptions shows regulators are actively working through how these systems will function, not whether they will exist. And if Wall Street eventually transitions toward partially tokenized settlement infrastructure, networks capable of handling fast settlement, liquidity movement, interoperability, and institutional compliance could become incredibly important. That doesn't guarantee any one network wins, but it explains why XRP keeps appearing in conversations tied to tokenization, settlement, payments, and institutional finance modernization. This entire market increasingly feels like it's moving toward a hybrid financial system where traditional finance and blockchain infrastructure merge together. And right now, Ripple seems determined to position itself directly in the middle of that transition. Now add this to the equation. CME's XRP's futures reportedly surpassed tens of billions in trading volume during their first year. Whether someone is bullish or bearish on XRP itself, that level of derivatives participation signals institutional attention, because institutions rarely enter markets at scale without seeing long-term opportunity. And when you combine futures growth, tokenization pilots, Ripple Prime expansion, stablecoin infrastructure, and cross-border settlement initiatives, you really start seeing a much larger picture form, not just crypto speculation, financial system modernization. So, when you step back and look at all of these developments together, this starts looking less like isolated crypto news and more like pieces of a much larger financial transition. XRPL climbing the RWA rankings, tokenized treasuries, government bond pilots, stablecoin expansion, Ripple Prime integrating with institutional liquidity venues, wallet growth, infrastructure upgrades, institutional derivatives volumes, cross-border settlement experiments, and Wall Street exploring tokenized market infrastructure. Individually, each story may seem small. Together, they paint a very different picture. The next few years may not be about which blockchain trends hardest on social media. They may be about which networks institutions quietly build on while everyone else is distracted by noise. And right now, the XRP Ledger keeps showing up in those conversations. If you enjoyed this breakdown, drop a like, subscribe, and let me know in the comments. Do you think the XRPL is becoming a serious institutional settlement layer? Or is this market still underestimating what's happening here? Thanks for listening. We'll catch you in the next one.